Hello traders and investors, this is Lee McFarland from Kinship Investment. We've been working for a couple days to try and get some new interactive charting so I can review some different items with the videos, which is going to be awesome. So we're going to review our week as we just had it up to the middle of the month. We're going to review crude oil. It's been a fascinating movement of crude oil right now. It's gone up, gone down, and we'll review a lot of that and why we think it's still got some movement to top right now and continue moving down. And we had I'm so grateful for being in touch with a lot of traders locally, and I was just chatting with one today. And it's fascinating. There's a lot of people out there, professionals, who are just very frustrated by the market right now in general. And we're talking about the Dow, the S&P, just general markets, and that they don't want to go long, but they don't want to go short. It's just too dangerous in either situation. And if you look at it from your short trader, you can prove to yourself pretty easily that there could be top and up soon, but I still think there's room for movement. I thought it was topping soon, but I started looking at the charts a little more, and I'll show you a couple that was really fascinating for me that hopefully will help people out there as well. So we got month and a half, or half a month review, we've got crude oil review, and we got the index. So let's just get to it. So the market on crude oil was acting a little crazy last week, and by I mean crazy, it affected us in the negative sense. But not to the point of being really detrimental. It did reduce our market-to-market valuation of our iron condors that we bought. So that means if we've sold a call that was $65, let's say, and crude oil has gone up from 50 to 57, which it did, that's putting pressure on that sold call of ours, and it increases the price that it is, but it's also so it's reducing our valuation. But on the other side, we're very short-term traders in the sense of our expiry is not far off, so it may have caused pressure there, and it may have been detrimental to our valuation. We're still within our risk parameters, so it didn't really matter so much. But here's our returns for November, and you can see we had a substantial downturn just because of crude oil. And we did a lot of review last week in the sense of where our positions were and why we're market to market of our valuation going down so much. And it was just because we're too heavily weighted on crude oil. And there's a couple of reasons for that. We are looking at acquiring more funds into our account, so we're pretty comfortable where we were sitting, and knowing that there's no more funds and capital coming into the account, and we would have had to add to these positions anyways. And if we're satisfied that we're in a safe environment, that we're doing having safe trades with our current capital, we weren't too worried about it. But it was showing dramatic work on our valuation all the way down to like 18% from a high watermark. And that's really interesting, and I'll get into what it shows on the crude oil side, and this sort of 15% valuation shock or whatever for us was really only attributed to an increase in price of about $2 for crude oil. So at one point in early November, we may have had a call for 15 cents of valuation that we have on the short side, and then it just increased a couple bucks. That's just enough to put pressure and to increase the valuation of any particular call that you may have. The implied volatility really ramped up as well. And then when crude oil declined in price the early week of this week of November 14th, 15th, you saw that decreased valuation quite substantially, quite heavily. And we weren't too worried. Like I said, we're far out of the money regardless. if it broke out further to the upside, we would have had more detriment valuation market to market for accounts. But on the other side, we're still safe and our expiry is pretty close. And we have, we could have easily just sold a little bit of it to make more margin room, or but we still had a lot of cash on hand and a lot of room for margin. So that wasn't a concern for us, but it's definitely interesting to show, and we'll get into that with crude oil here shortly. But as we are sitting for November 14th, 2017, for November up until this point, we're up 8.17%. And that's pretty good. That's pretty well where we want to be. We want to be even less than that if possible. And why we're kind of pinpointing November 14th as a review up until now is because on November 15th we acquired more capital. That went into the accounts in the morning, November 15th, and a new position started to be instigated at that point. So any return now has to be reviewed from that point moving forward with the new capital, and is not reflective upon the overall return for our clients and ourselves. So that's enough of the actual what happened with our accounts. Let's review why. And this is a fascinating thing. I worked a lot, a couple days actually, on different charts to interact with that may be beneficial for people that are looking to do what we're doing, or to look to provide capital and into our business and help us out more. So let's bring up our chart and let's see if this works for you, so I can work with it. Okay, and in fact, like when I switch this over, this is new technology for us, and we're just trying to work it out so that you have a screenshot of what I see. This is on one of our financial computers that I use, and this is a picture, what you see right now, from another computer where we have our brokerage accounts. And I just made a picture of it because I do all my recording and whatnot on one of our main desktop computers that we're now using. I have multi-charts on here that I'll interact with and that you can see. But in the meantime, I brought up a couple of pictures that can kind of show, and this is from Interactive Brokers from charts, and it's just easier to bring it up from there and give you a picture of it, and I can highlight some different things. So this is interesting. What I want to discuss is that this is right now what you're seeing here is a call option on oil, and you can see November 3rd down here. I don't know if you can see my pointer, but November 2nd, 3rd, the price is around 15 cents or so. And at that point, it increased in value substantially when crude oil kind of continued to rise in price, and we'll get to that in a minute. But what I want to really show people, new traders, and I know there's traders out there that are watching, and I'm going to get to something that's really cool that you want to kind of watch as well, and they'll recognize because I've told them a million times about this. But with options, I love to see active options moving, because this is an option that we are holding right now, and you can see when it's active, it creates its own chart patterns, and you can see here there's a nice increased trend line here with higher lows being hit and the lower highs being hit here. Now, at this point, it could have gone either way, really, and I'll show you why. My analysis will show that we're anticipating crude oil to decrease in price, regardless. But I was anticipating after the weekend. This is November 10th on the Friday. This is 13th on the Monday, 14th, and we're into 16th. I'm making this video for the 14th here, of course, but it is the 16th right now, and I'm sorry we're delayed in our video, but it was Remembrance Day, plus we wanted to take our time to make this video, and we wanted to also market to market the valuation of our fund on November 14th before our new capital came in. So that's where we are here. Anyways, this is just a chart for options to show that when it breaks this particular pattern, it's substantial. It's almost an indicator of what's happening to the underlying, so you can get an indication of what could happen with the underlying. And this is interesting. If you have a break like this, November 13th with the option, that could potentially give you an indication that, well, that's a big break. That is a huge break right there. It was going up substantial, the triangle, and it's a breakout. I don't know what you can fathom as the base and the apex to kind of get a point where this may lead, but in this particular run, because of the break, you know, it could have been one of those things where you sold it around here, and it's a good trade, right? You could have sold it here after the break. You know, you might have, you know, sold it down here near the end of the day, but you still would have done well. But it's just interesting to see how option charts themselves can signify a huge movement within the underlying itself. So that's just what I want to show here. And now I'll just move on to the 15-minute and see if we can bring this up. Or sorry, not 15 minutes. It's the hourly on the crude oil chart. So let's just bring this up. So you should be able to see this fairly clearly, I hope. And so what you see here, again, is this is the crude oil price of the December forward call option. And it had a substantial run, you know, from the end of October, we're down here, and I know it goes back further, and we'll get to the longer term chart, but this is just hourly. And this is where I wanted to show that, you know, on the daily, we'll show how we saw that this was a topping formation. This is a lot of resistance up here. But this is what I wanted to show on the hourly. I told traders, and I know there's a couple watching right now, and I'm reminding them, if you see heavy resistance in an underlying product, this is crude oil, but it could be anything, a stock or whatever, and you see heavy resistance, look for this pattern. Look for a descending triangle. I love these I love this particular pattern. It's easy to see, and it's fairly easy to trade with good risk parameters. You know, you see this baseline, you see the triangle coming down. This is the profit apex, this is the base. So if and when it breaks, you should have a profit potential of about this much here. Do you see my pointer? I hope you see my pointer there, and that's where it went down to. I can see it continuing to drop, and we'll get to that in a minute, but that's what we saw, and this is easy trades, and I hope in the future you know, we have enough capital on hand to make small trades for these sort of you know, indicators that I see. So just finding my notes here. So let's move on to the daily chart of crude oil. And this is now an expired December futures contract, and please remember this is a continuous contract, so it's back adjusted as well, but the valuations are appropriate and are adjusted, so they're good in the sense of making chart patterns and analyzing where the market is going. Let's look at the longer term. So let's go way back, and it's getting all squished, and I know it's hard to see maybe, but you can see my pointer, and we're going back way back, right? So we've had quite a run for crude oil in general. Back in 1999, 2000, this was the start of the commodity cycle. And if you don't know about commodity and stock market cycles, research intermarket analysis is very important if you're into trading the markets and whatnot, and commodities. And that for every 15, 12 years, whatever it is, we have a cycle of stock market doing well and then the commodities doing well. So when the commodities do well, the stock market goes sideways. When the stock market does well, commodities go sideways. That's a simplification. But in 1999, 2000 was the start of roundabouts, and I know there's experts that I know will prove me wrong, but it's somewhere around this area where the stock market cycle petered out and went sideways for quite a while into 2011, 2012, and the commodity cycle started, right? So the commodities increased in value substantially all the way up here, you can see, and then had a substantial decrease in value, which is major. Double bottom here. Let's kind of expand it a little bit. Double bottom, and then continued its upward movement. And around this time, 2010, 2011, 2012, this is when the change was happening to the stock market cycle. So I know the bottom was in 2009 for the stock market and for crude oil, obviously, but the actual commodity cycle, it didn't break out from its previous highs until around this time. So it's kind of hard to justify when the stock market cycle began. Whatever the case is, stock market started ramping up and going up, and that's just a simple cycle that happens. It happens all the time. So we can see then that the commodities now are under pressure. So this is interesting, right? You can see here it was forming some topping, highs at this point, and it was making this nice trend line here, and it broke. So we had a substantial decrease after that break. This is still in the commodity or in the stock market cycle. We had a bit of a bounce here, and this could have been an area here just after the highs of the W here was broken, where shorts exited. We had a bit of a run here, and then we formed this island formation. And they could have gotten out here for the shorts, but boom, after the island was broken again, it was all hands on deck to short it again. And we had another bounce here and continued on, and another W, and then we finally broke out of the long-term downtrend. So from that point, let's expand this again. I should say what you see here in the long term is a Fibonacci grid. So let's zoom in here now. And like I said, we bounced off that W, we broke out, and then we started forming this nice little channel. And this is where we are today. This is going back to the middle of 2016. We formed channel highs and lows, highs and lows, highs and lows, highs and lows, right? And what I find interesting is that at this point, last week, I was looking up, and I was talking to a trader today about this, actually about the market in general, where he's waiting for the news to really come up and say the stock market is never slowing down. It's always going to go up, and that's a big contrarian indicator. This is what I was hearing a lot last week with crude oil. I was reading a lot of, this is the new bull run, this is this is that. Okay, well, that's interesting. But on the chart wise, it was very easy to see that there was substantial resistance from the upper trend of this channel. And when you do a channel, you mark a line like this. Usually what you try and do is clone that same line and see if it matches up. And it matched up perfectly with the bottom, matched up with the middle of the movements of in between the channel itself. So that's something to really look at. What you make one line and then you compare it to the bottom and the middle areas, and you can see there is a definite support here on this line. This was a it was like a whipsaw around the line. Got some resistance on that. Little bit of this is a different line. This is the 76.4 line of Fibonacci. providing support or resistance depending. It formed the base there. It came back up, hit a resistance of that area. Again, support on those trend lines. So good indication of this overall upper trend channel here. And you see here at the end, we hit that top, and then also you can see the 61.8 Fibonacci line it hit as well. So on the longer term, that's pretty substantial. You know, that was quite a bit of a support back here in this location, and is providing resistance in this location. Now, as everyone knows that watches my videos that RSI I love watching and looking at, and what's really critical to look at is the long-term RSI. And here I've set the RSI standard at 80 and 20. If you're not familiar with RSI, there's lots of stuff on the internet to figure that out, relative strength index. But look at this, we barely hit the 80, and that's quite a substantial resistance up there. And then you go back and look at when it's hit 80 before. Go all the way back, all the way back, all the way back. Barely hit, almost hit it back in 2009. All the way back, all the way back. Little bit here, finally, 2005, huge resistance. But anytime it gets close to that resistance line, it is a big, it's a big resistance there. Here it actually went through a bit, which is quite unique. It kept on going in the price, but that, you know, so whatever was happening there. But it doesn't happen often, and that has to be taken into account right now. And what happened eventually, of course, is that it decreased in value for the price, and the RSI decreased as well. And there's a momentum on the RSI of higher lows, and you can see this very, very clearly, which is very interesting for me. The higher low trend line on the RSI, and that's so critical. I find that I don't get as much value from the upper trend lines decreasing for whatever reason. It has to do with the movement of when you're short and when prices go down. That on the downside, going up with higher lows, I find more value in that. I don't know what it is. It's just how it's worked over the years. But I do find that in the upper echelons of 70 to 80, when you're up here with RSI, that's definite resistance. That you got to say. 70 is the usual base for most traders even. And so 70 to 80 is big resistance. You can see at 70 here. My line is holding at 70. That's hit there numerous times and always come down. But what's interesting here too, going back to the middle of 2017, so this is June, right, late June, and we formed this trend line, right? And this is a nice bullish move. We have one trend, two, so I'm going to highlight that, one trend. Do you see that? From here to here. Two trend. This is the second trend, right? Higher lows, higher low, right? Creating another one. And then the third final movement here. Boom. There it is. There's the final movement. Bullish moves like this happen in threes. 1, 2, so it's 1, 2, 3. I love that. And so where do we go from here? And this is really interesting. So we know that we have potential support on the RSI down here for crude oil. The problem is that the RSI indicator is far from that yet. It's far from that. So to get to that point, it would have to break this third line. And if it breaks that, boom, we've made this movement, 1, 2, 3, irrelevant. That's just irrelevant now. Once it breaks that, it's in a new pattern that it's going to make, and it can bounce off of this. It can maybe have a little bit of support when it hits these two or something like that. But we're going to be in a different sort of pattern. We've broken that pattern. Okay, something else is going to happen. I don't know, but this is what I'm looking at. There's not much more to go down. When it breaks this, it's not going to take much. We're already there. And when that breaks, it might find support, but we're going to go down to this area. That means we've broken that line, and now we're on to a different pattern that we have to be aware of. And this is going to provide resistance. We hit this resistance, that 61.8 line for the Fibonacci line is going to provide that resistance. So that's fascinating. Now, one more thing that led to this analysis of having a resistance up in this area, and is really important, that I'm really excited to kind of show traders and show people that watch these videos. I'm bringing up what's called, this is a spread of two different futures contracts. The first one is the December contract, which is the forward contract, and looking at 6 months later. So the top chart is the December futures oil contract. The second chart is the June 2018, 6 months later, contract. And below it is a ratio of the two. So what you get here at this particular blue line right here, this one right here, I just moved it now. I'm going to put it back to 1. Anything above the 1 line is indicating backwardation. Anything below that line is called contango. Okay, simply, and you probably heard this in CNN and or whatever the talking head. I don't bother with any of those, but anyways, if you've heard of a backwardation contango, that's all that is. That when this line is above the 1, the ratio of 1, that means that the forward month, in this case December, is higher in value, is priced higher than the one 6 months from now. And that makes absolutely no sense, because if people own oil, if people have tankers of oil sitting offshore in storage and all this, that means that the price now is higher than what they can get in the future, right? And that's ridiculous, because that's not taking into account carry charges, the interest, the blah, 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 you know, inflation, this sort of thing. So this is a huge, huge indicator to sell the oil that you have. If you are above this zone, and I'll just highlight it. So if you are in this zone above the 1 mark, this is an indicator for people who have oil to try and get rid of it, because it's cheaper in the near term than far away, right? But you might have extended periods, and this is fun. This is where we're going to get into some history here. So let's go all the way back here, and I know it's a little dicey in regards to the price structure. This is not a continuous contract. These are the pure contracts, so the pure prices of the particular contract. So it's a little choppy, let's just say. So you know what indicators you can get off of this is kind of irrelevant, but it's showing some sort of pattern that I want to show you. So let's take, for example, way back here, and we form this nice trend line that's continuing up. Well, does that mean that if it's below the 1, so it's in contango down here, backwardation up here, contango down here, if it's in contango, that means that the forward month is cheaper than the one further away. So is that a buy right here? Could that be a buy at this location? Potentially. You know, it was down here and it went way up here. You know, if you're looking at this trend line, And again, you got to take this all with a grain of salt. This is all choppy market action. As it gets cleaner as it continues on. If it breaks out, is that another buy? I don't, how I look at contango and backwardation is basically, if I was a directional trader, anything above the 1 ratio mark, which is if the contracts are in backwardation, I would only be looking to sell. Okay, so let's make that clear. If you're in backwardation, I would be looking to only sell this particular underlying market, okay? And it works especially well with crude oil, natural gas, and anything that has carrying charges that you need to, hold in storage and stuff like that. So it could probably work for things like lumber and meats and hogs and these sort of things. I don't deal with that. I'm just dealing with crude oil and natural gas. So when it's above the 1, it's in backwardation in all this area, you'd be looking at potentially shorting this all the time. Because what if you're looking at here and you have a nice resistance line and it breaks out of that? You go, oh well, that's a buy, and you could potentially buy that. The problem is you're already in backwardation where the pressure of the sellers are keeping the price down. So whatever you might buy it for, you're basically, when you want out, you're basically getting the same amount. It's not worth it, right? You're better to make any sells that you make. Let's say you have a pattern, and hopefully you can see this, and I'll try and widen this out. And this is what I'll be looking at in the future, maybe for future trades if our programs allow this. You take a nice trend line here where you found, okay, you had a high and you have a new lower high. That's now formed a line. So what about here? And you hit this point, right? And you go, well, that spot is a sell. You could sell that right here, right? And buy it back when it breaks out of that trend now. So, at this particular point, you probably didn't make too much. You probably broke even. If you sold at this point, which would have been right at this location, you probably would have made a little bit of money, but not very much at all as well, right? But now let's move forward in time. This is, again, 2013-14. This is now in the new stock market cycle. Commodities are not going to do well in the stock market cycle as well, I should say. And here we're forming a new high in backwardation. Oh, we hit there's a lower high here, and boom, there. We have from here to here to here. And would that potentially be a sell? It could be. And if you did sell it, you'd be losing money. But then here, boom, hits again, right? Hits that line perfectly again. Add to your position, right? And now it's decreasing in value. Now you've gone from, a mid-grade of $86, $87 of when you got into your sells, and now it's going to be worth 50 or 60, whatever the price is at that time. So this is kind of what I look at. Backwardation leads to contango, and this is where in contango, when you're looking at when you're getting out of your position, it could be way down here, which is way down at $45 when this long-term trend breaks, right? And now you're in a buy, right? So, these sort of things you can look at, and here's a nice trend right there. Oh, beautiful trend, and it breaks though. And do you sell it? You're in contango though. Do you actually sell that? Maybe not. You only do your buys and your sells for an exit, right? But here you have a nice long-term trend starting out. Here you might buy, here you might buy, right? Where do you sell? In this area now you're in backwardation, right? Here or here you get a nice sell at this point. You probably made some money, but this is irrelevant. I just look at this as a kind of a general indicator, which is interesting for me. Let's just take this off of here. Let's just show you now what I see for, for the current action and why, you know, I wasn't really on the crude oil is making new highs anymore bandwagon. Here you have a nice trend, boom, boom, boom. We're just inched into backwardation. This is in some of the news out there where it was saying here that at this point there's people either saying it's going to new highs, it's breaking out, da 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 da, or there's smart people going, ooh, this is the first time it's gone in backwardation for a long time, and that's critical. Plus, so if you would sell here, that would be a nice sell, right? People at this point who own oil on tankers or whatever are going, we got to sell this. This doesn't make sense to hold, right? Plus, look at this nice upward channel, or upward trend line hitting the higher lows. Boom, 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 and it broke it. And this break happened long before what I just showed you with the triangle. That's the triangle in there. That was in the middle of the triangle, and this broke it. If you're holding long, you got to give your head a shake, right? You broke the upward trend, you hit heavy resistance on backwardation, you got to be selling, right? I can see this now. Now let's just go back to the crude oil one-day chart. I can just see this now resolving itself, meandering down a bit more, coming down from its highs. It's had almost an island or this descending triangle up here. It can break this. It could bounce up, sure, it could do that. It could bounce from here, but it's got to find the support down here, and that might not be until this area over here, which is around 54. It's around 55.5 until about 54. That's the next support. So that's anyways, that's what I wanted to show you. That was really interesting for me. That's why we don't get rattled in the markets. You know, we understand them. They have substantial times where they have increased volatility. They move in one direction, like you see here, substantially over short periods of time. You know, I guess this was end of June, so end of June to, you know, the middle of November. That's, you know, four or 5 months, right? So it was a good solid move from bottom to top, and now it has to resolve. Right now it has to resolve. It has heavy resistance here, needs to resolve. It may break out later. I don't know. That's not for me to decide. I'm just showing you what I see now. So lastly, I want to just hit upon a couple more pictures here of the markets. And I'll make this quick so that we can finish up this video, and I've taken up enough of your time and I need to get back to work, you know. I need to make some money. So let's bring up, let's see, what do we want to bring up first? What's interesting for me? Let's bring up this one. Let's bring up the first chart of the S&P, and I really hope that you can see this clearly. I'm going to just test this just to see. I can't see it very well, so myself, but hopefully you can. This is a long-term chart from 2005 all the way to present for the S&P 500 index. So it's a fairly common chart. Everyone's seen this chart, and what I have here is overlay of a Fibonacci grid. Sorry, just having a drink, clearing my throat. So we linked it to the top of the current chart right now, around 2560, or sorry, 2600, I should say, at the top, roundabouts. It almost got there recently in the last day or so, and down at the lows from 2009, and you can see the Fibonacci tracks fairly well. Support here, resistance, broke out, support, bit of trading back and forth along the 50%, but then support again, resistance at this line, supporting, supporting resistance, support, support, resistance, support, and then breaking through clearly on that resistance with support and continuing up. So if you took this and this is a mistake of a lot of traders, putting a Fibonacci from the low, let's just say, so it's obviously here. That's no mistake of that. But where you end it, where you take it to, that's indiscriminate. That's your own bias. So theoretically, I can look at this and go, well, yeah, it tracks perfectly across here. It's nice movements. It's finding the support resistance right on the lines, that sort of thing. Plus, as everyone knows, my RSI, just love that. It's hitting resistance. It's very rarely up at this location up here. 2007, yeah, 2010, 11, and the mistake though is that it can hit, and it can stay here, and it can continue to go up, right? But and also what's really interesting as well, look at the RSI, the lower highs, or the higher lows. Boom, 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 boom. And then this is above that. This is making another trend, right? So we're compressing those higher lows to a point where it can continue to go this way in this area. Well, wouldn't that mean that it goes up further? Well, this is the mistake that, if biases can give you, that you can, and this is what I want to discuss, that, I was just chatting with a trader today who, we're just talking about, maybe in the next month, maybe that could potentially find that this breaks that, and if it does, then it has the support here, but that's a big break and a good bit of room to make some money on the short side, right? But here's the kicker. Let's look at this a different way. And this is why I like doing what I do, because I don't have any biases. I don't really care where things go. I just enjoy looking at the markets and making money. That's the point of is not really being right, it's making money. So let's take this for a different perspective. Same chart, nothing different. The only difference is that I put the Fibonacci start at the bottom as usual, but I ended it at the top of that major highs that it found a lot of consolidation area in, right? So what's to say that wasn't the major part? That wasn't the move right there. Boom to boom. That makes a lot of sense, right? So there's your 100%, you're tracking in the same line, support, 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 resistance, support, bouncing around here, bouncing around those lines, finding support along the 23% line there. What if this isn't a new move? And if you know Fibonacci, if you track this and put this, it'll automatically also put in the 61.8% of the extension move on Fibonacci. What's to say that it's not ready to continue to go up to 3,000? And why not? See, down here we have 2016, 2017, 2018, 2019. So over in the far side is 2019 line, right? We have a lot of room for the RSI to move and to continue to go up through 2018 and possibly middle of 2018 to the end of 2018 to get to that area way up here. Hopefully you all can see that I'm just waving this area all up here, right? What's to say that it doesn't get up there, right? No one's to say. This is a stock market cycle, right? We started the stock market cycle, and this is debatable where it starts, if it starts down here or when it broke the highs over here. So it was around 2012, let's say, and we're into 2017 and 18, and then it could bounce around here for a bit, right? And then continue up for a bit. And we have quite a bit of time to go in that sense. It could continue to go up. And this is interesting because I just showed you something previous, and that was the movement of bull markets, right? And the trend lines. Here's the major trend right here. Boom, right? Here's the secondary one, right? Does that mean that we're going to get, and I'll just see if I can get a nice line in here. Does that mean we're going to get another one? I don't like that line. Let's see if I can do a line. There we go. Lines. Oh, here we go. Are we going to get a secondary line? Possibly. And it's in black. Why are you in black? There we go. There we go. Okay. So are we going to get a secondary line that's something like this? That's the blow off top. You know, we have one line, two lines, right? Third line, is that going to continue into the middle of 2018 for that last blow off top? And it's a shorter line. They're longer and about half of the distance. So from here to here is about from here to here for the secondary one, and then half of that, which is about from here to here, that's the last one. Is that what we're going to get? I don't know. I don't know, but I find it interesting, and I caution, you know, people that are looking to go short this market. The market can stay irrational long after you are solvent. So that's all I had to say about that, and I just want to kind of bring up why I put my Fibonacci between this point and this point, because let's also bring up one last chart, and then I'll sign off for today. Let's don't save that. The QQQs. So this is the NASDAQ index, and this is why I was looking at putting the Fibonacci grid from the lows of 2009 to the this point at the major highs of consolidation, right? And you can see here that you know, the 61.8% above that is not too far after. And here's interesting. I just told you about that three lines. One, you know, two, and last little jump, three. I think we're on that. And this goes to, this line ends up at the capitulation at this level around about the middle of 2018. Does that mean that's what's going to happen? I don't know, but look at the RSI. I love the RSI, as everyone knows. I can't state it enough, but we have a lot of movement room within this area all the way to the middle of 2018, right? Where then we can see a resolution of that. Middle of 2018, I have the functionality within our trading agreements, you know, to do these sort of things. But our systems, I will remind everyone, and let's go back to the screen just to finish up. So I wanted to continue what I was just chatting about, and I did, and I didn't press record. This is the awesome thing about technology, and we're utilizing new ways of broadcasting a video and showing you interactive charts and how we work with that. So basically, in a nutshell, though, what we're showing here is not you know, what we do internally as a business. We're credit sellers. We buy iron condors, which means we make money on theta decay, and what we work off of is systematic trading systems. So it's very systematic of what we do. And the discretionary bias of what I'm talking about with the markets and with crude oil, it doesn't have any bearing of our directional sense of our trades that we have now. But it's good information. It's good backdrop of our thinking process, and hopefully it helps you as traders moving forward. So I thank you for your time, and we'll look forward to chatting with you next week as we review now. We have new capital in, and we're working with that now, and we'll show you our results with having much more capital and sustaining the same sort of returns with that. So take care.